Okay guys, so I'm going to do a video explaining the basics of my swing strategy. Obviously, if you want to learn fully in detail and get access to myself and ask questions and everything, then join my mentorship. First link in the description of the video. But just to give you a general idea of how I'm actually swing trading and how it might differ from my day trading, because I know I've talked a lot on the channel about mindset, psychology, why I'm actually doing swing trading, but I haven't actually shown my entries, my exits, my basically everything technical wise. So obviously it doesn't matter if you improve your psychology if you don't have the technicals in place to help as well. So we're going to go through that. And the last video I did was at the end of May, and we have obviously taken some trades since then, so we'll go through that too. So the main thing here, I just want to show you that the strategy so far is working quite well. We've traded for 4 months and we're up just over 5%. You know, if you look at that, it's an average of just over 1% per month, which over the year, if I make 1.25 to 2% per month, that is very, very good. And the way I want to see it is, if I'm beating the S&P 500, then it's worth doing, in my opinion, because if I'm not beating the S&P 500, I can just put the money in there into an index fund and kind of make money passively without having to actually do anything. So with no obviously human error, there's no mistakes that can be made, but hopefully this will actually beat it and is on track to do so, although it has only been 4 months. You know, once this has actually reached a decent level of consistent profit, probably 6 months to a year, people want it. So I'll open a group where I basically send every trade I take, so you guys can see the insight behind that. But if you want to learn to do it yourself, check out the mentorship. So like I said, I haven't shown you this yet, but June we are up 2.27% profit. So we had GBP USD trade and a Euro AUD trade. So we will maybe go over those. I just want to show you in my edge wonk here. You'll see that basically all of my setups have the screenshots in here of the trades. So you have the trade, you have the result. Obviously this strategy doesn't have the highest win rate, but because of the risk to reward, this doesn't really matter. You see we have quite a few losses, but then one win, almost 4%, another win, 2.6%. You know, the wins actually are quite large in comparison to the losses, which does help greatly, especially for, you know, psychology, knowing that I could lose 3 trades in a row, win one, and I'm back at break even or even in profit. That is a great feeling to actually have. Let's just go over a simple setup. Obviously, you'll see that the majority of these trades are trading from imbalance areas. And for the past few years, I've basically been trading off imbalance areas, and I feel like it works perfectly. A lot of people will be like, oh, well, imbalance doesn't exist and stuff like that. But, you know, if it works for me and it's worked historically for my testing, then, you know, why wouldn't I do so? And this is obviously my master account. So this is the account that I copy the trades to different accounts. You know, I always have a master account that, you know, usually an account size that you're comfortable trading with and one that you're used to trading with. So it means that you're not having the struggles of managing large accounts, seeing the large profits fluctuate. You're just seeing the account size you're used to, but the trades are obviously being copied. So you kind of forget that sometimes, and it is a lot easier to deal with. You'll see this setup here, for example, we have breaker structure, retest in. You see here, breaker structure, retest in. Obviously this one didn't work and it's not going to work every single time. But this is obviously stuff we can learn from. You see here, there was a breaker structure. We were looking for a retest. We didn't get that. It melted, but that's completely fine. Again here, breaker structure, retest. You know, trades like this can be quite annoying because I'm not the type of person to move my stop loss to break even or take partials. So it can be quite frustrating when price is, you know, 3% in profit and then reverses. But again, the reason I don't take partials or move my stop loss to break even is when I'm back testing, I've never done that. So if I then take that into the live markets and do it, my backtesting results are completely different. You know, let's say for example, this wicked in here as it did, and then went straight to my take profit. I would have completely missed out on the full trade. It's not something I'm interested in doing. Again, here we had a nice retest in. I think this was my 15-minute trade, and then the 4-hour trade got stopped out. Again here, another loss. But then when we have wins like this, perfect breaker structure, and then retest in. So if I actually just show you another one here, there we go. This one did actually close early, I'm pretty sure. That's why it isn't a full win. But let's say for example now we have AUD CAD. If I show you the setup I was actually in, And I'm going to overlay some clips as well because I actually live filmed this trade. So it might have been, I don't think it's on here quite yet, but I'll show you my entry and how I actually got into this trade. So if I take you back to when I actually got the entry, it was around this point. So first sign straight away, you can see that we are, in this uptrend. So immediately we're looking for buys. And what's the first thing we look for when we're looking for buys? We either look for previous structure or an imbalance area. So obviously we had this structure here, which obviously the high, then we've broken through, likely to see a retest into this area. I'll look at the retests if there's no imbalance, for example. So for this situation, there is an imbalance. So we can draw the imbalance candle like so. And then obviously the trade's still valid. We haven't tested the high. If we tested the high and failed to break, a swing failure, then we could potentially look too short because it signifies a shift in market direction, whatever you want to call it. But for example here, if we're trading and we do a 1 to 3, for example, I can't remember what my take profit was. If I just take a look on my phone, okay, let's just say our take profit was a 1 to 3 because I can't actually remember. But yeah, this trade very, very simple. We've got the breaker structure. We've got looking for a retest into this zone. We've continued the structure. We haven't failed to break another high. All we're looking now is a rejection in this area. I remember I set the limit around here, but price came down, wicked into the area. I didn't force myself into the trade. A lot of people force themselves into setups when they don't want to miss out on the trade. It's known as FOMO, fear of missing out. They see price near the entry and they feel like they should be in the trade, so they don't want to miss out, and this is the reason why. So if we play price on now, you can see we then came back up, wicked into the trade, and this entry was absolutely beautiful. This is probably one of my best entry swing trading. I'm quite happy with this. We had pretty much zero drawdown, or like a pip or so drawdown. And then here is a great sign that we broke the high. So let's say we had 2 wicks here and then dropped down. It's not a great sign that's going to continue to the upside, if we close with the bodies below the previous high. But as you see here, we've got 2 closes above the high now, so we were confident in holding this trade. My TP was a lot higher than this. Maybe my stop loss was actually a little bit larger. It's around this sort of thing. And you see now retesting into this zone again perfectly. Okay, now we'll see if we can break the high. We can barely break the high. So now when we're looking here, we can now identify consolidation because we're not breaking the highs, we're not breaking the lows, we're kind of struggling. So this is either going to break to the upside or the downside. Obviously there's a good chance it breaks to the upside because we are on an uptrend, but we just have to now base it off of the structure we're seeing. Here is when I actually got out of the trade. We've got a clear break to the downside, so I no longer want to be in the trade. This trade could immediately after this run to my take profit, but from my testing, I've noticed that the majority of times when this actually happens, the trade loses, or it ends up losing after being in profit like this. So you've got to close below. Obviously it retests back into the consolidation, but then we consolidate even further. And you see, I wouldn't even have wanted to be in this trade because, swap charges would have been massive. But you see here as well, what we got? We've got a break to the upside. And then what happens? We continue going. And then a break, you could say break to the downside. And then it goes and pushes up to the take profit, which was up here. You see the take profit level with a 1 to 3 would have been pretty perfect. But I don't want to be in the trade because I got a sign that the trade was no longer valid. So even though I made, I think, just under 1% or like 0.8% or something on this setup, a lot of people will be annoyed because they see that the trade went to take profit and they could have held. But I'm happier not making full profit or even losing a trade if I followed my plan than if I broke the rules to make profit, because the plan is there for a reason. You've tested your strategy, you've tested your risk, you've tested your trade management. So if that's not in place when you're actually trading, what's the point? What is the point? So I do feel like the people that actually break the rules and make profit are in the worst position possible. It's like, for example, if you gamble the first time and make money, you then think, oh, I'm quite good at this. it's actually working, so maybe I should do it again. But no one actually makes money long term in gambling unless they are, a professional. Even in trading, you don't have to be a professional to make money long term. You just have to find your edge, stick to it, and not break any rules. It's as simple as that. If we're actually flicking through some different pairs now, you'll see that some setups don't work. So some pairs have a lot cleaner setups than others. So you'll see here, for example, this was a trade setup that I actually took. And it obviously might not look very clean to you, but it fit the plan. Obviously, we had this structure in here. We had a body close below, so we're looking to get in when it retests. Obviously, this trade wasn't meant to be because we immediately went back up and hit stop loss, but we can journal it as entry fit the plan, the risk to reward fit the plan, the overall trade fit the plan, but it just lost, and that's completely fine. We're trading with probabilities. We don't know that one trade's going to win, one trade's going to lose. Obviously, setups will look a lot clearer than others, but if it fits the plan, take the trade. Even if you don't like the look of it, if all the tick boxes are there, why wouldn't you be taking the trade? Because you're waiting all this time to take trades, then when it actually happens, you're scared to take it because it doesn't look as good as you want it to look. Trade the plan and make the profit. That's all that you should really focus on. So over the next few months, this is exactly what I'm going to be doing. Losing months, I'm happy with only losing 0.9%. Winning months, 1 to 3% is very, very good for me. You look at the stats though, it's quite interesting to see how long positions, 62% win rate, short positions, only 22% win rate. So that is quite interesting, and maybe it's something that I could look at in backtesting at why this possibly could be. But as you see, we're looking quite nice overall. It is quite interesting because I'm in multiple trades a lot of times, so the equity and the balance is quite different. So obviously you see here we had 2 losses of realized profits or realized losses, and then we had a win that was obviously being held at the same time that brought us back up into profit. Again, push up, push down, bigger push up, push down, bigger push up. And that's what you want to see in an equity graph. You want your losing streaks to be completely demolished by the winning streaks. Then your losing streak, you see here 1, 2, like 3 or 4 losing trades, 1 winner brings us up around 3% profit. And that is the goal with trading. Your wins outweigh your losses massively, and then you can survive with a lower win rate pretty much. So just a little deep dive into my strategy. If you want more, obviously check out the mentorship, and I'll catch you guys in the next video.